Hello everyone, welcome to our webinar on binary stream with Endeavour Solutions. We're looking at the subscription billing suite. Very excited to have a number of people online today and special guests Justin and Neil from Binary Stream. Our agenda is going to be some quick introductions and then talk about subscription billing, why now, different business scenarios, and allow an additional introduction from the team at Binary Stream. For those that are new to Endeavour and watching this recording, we've been around for 30 years now, serving clients across Canada and the United States. Our primary service is Dynamics GP, Business Central Nav, as well as CRM, and expanding into a number of the cloud products. We are gold certified for ERP, gold certified for cloud, gold certified for data analytics, and bring all the pieces together under our advisory services, implementation and upgrades, and ongoing optimization and support. We're now over 550 clients and continuing to grow and expand. And a number of our clients are using products from Binary Stream, including their famous multi-entity manager, as well as components of the subscription billing suite. Our plan for Dynamics GP and for Business Central, taking these two products and surrounding them with cloud applications, with ISV and third-party applications to help them be bigger, better versions of themselves. Both are strong ERP systems for financials, for distribution.
Thank you, Scott. Appreciate it again, and thank you everyone for being here today. My name is Justin McCool. I'm one of the partner account managers here at Binary Stream. With me today, I've got Neil McDonald, and he's one of our solution consultants today. He'll be handling the majority of the call of the demonstration. I'll have a few slides here where we'll talk a little bit more about, as Scott mentioned, some scenarios, maybe a quick introduction of who we are as a company, and then I'll hand things over to Neil to get into kind of really showing you what the product can do, and go from there. So again, Binary Stream, we're headquartered in Vancouver, Canada. We've got over 100 team members here in Canada, the majority of those in our office in Vancouver. The majority is on the development side. We are gold certified, been a vendor for quite some time. We published our product actually out of the Vancouver office. We've been delivering products right across the Dynamics suite since 2001. As Scott mentioned, our kind of primary and probably most well-known solution out there is our multi-entity management solution. And then from there, subscription billing. We develop right across the stack, so what you're seeing today is going to be available in GP, it's available in Business Central, and available in Finance and Operations. So actually one of the only products we have right across the stack, but we're really excited about it. It's probably the second most popular product for us outside of multi-entity management, especially in the GP world where people are trying to kind of find better ways of managing that subscription billing piece and then handling the rev rec across the way. So with 2,300 customers, we're pretty well represented. Been working with the group at Endeavour for, well, a large majority of that 20 years that we've been in existence, and obviously enjoy that quite a bit, working with their group and whatnot. So we're going to be talking about subscription billing, what we call the suite today. And it's really made up of three components, as you can see at the bottom of that screen. But it's probably the only solution out there that's really allowing you to capture those contracts and those recurring contracts, and then allowing you to manage as I mentioned, the recurring contract itself, and then the rev rec, the expense and deferral piece on the back end. It handles a number of different complex subscription scenarios that we typically see. So whether that's usage-based, milestone-based, tiers, there's a ton of ways that we do this. As mentioned, we've been doing this subscription billing for a long time, so the product is quite vetted. But what it's really designed to do is increase the quote-to-cash efficiency that you're probably dealing with or struggling with today. The majority of customers that we're working with in GP anyway are typically managing this in Excel and in different ways, and we're really trying to bring that into the ERP and manage those contracts accordingly. The one very big highlight with our solution, it is ASC 606 compliant. So many of our customers out there are dealing with those compliance standards and looking for a solution that will help with that, and we bring that to the table. So our solution will allow you to become compliant with those standards, and Neil will talk and show that to you from a high level when I hand things over to him. So just before I get things over to Neil, I thought I'd just give you kind of a quick representation of the three products itself. So as you can see there, it's built in three components. And when we sell our solution right across the stack, we have customers out there that just really want to use our stuff for their contract billing piece. They don't have a lot of complex rev rec and deferral requirements, so they just really need a better way of capturing the contracts and really maintaining those on a year-to-year or whatever parameter they need. And that's what we bring to the table. From there, we also have customers that just quite frankly are the opposite, that don't really have any type of contract or recurring contract, but really just need a better way of managing the deferrals, whether it be on the expense or revenue side of things. And so those customers can buy just the ARED piece. And so these solutions themselves, when combined, become what we call the subscription billing suite. But just understand that they can be bought independently, used independently as well. That last component there, that multi-element revenue allocation, is our MIRA piece. So really that's the portion that brings the compliance with your ASC 6, IFRS 15, and really the performance obligations around kind of free items in a contract or bundled items in a contract. Neil does a far better job of describing it, so I won't take any of his thunder, so to speak, in providing you with a closer look at that. And so just understand that our licensing is based for GP on a registered user standpoint, so those registered in GP, and again, built into the solution. And yeah, we'll look forward to taking questions, and I think Neil will provide you with a better look at the software here. So without further ado, why don't I pass things over to Neil, and he'll actually kind of bring up subscription billing and give you a closer look. Neil?
Okay, so this is the latest version of GP, by the way. We're calling it 18.2. I don't know what the rest of the world is calling it. Microsoft keeps changing the name. I do just want to point out, though, that we are up to date with Microsoft with the latest version. Everything I'm going to show you today is available in 2018 R2, 2016 R2 as well. So if you're not up to the latest and greatest yet, not a problem. So first thing you'll notice is that all of our products here at BinderStream are fully embedded Dynamics GP modules. If we look over on the left, those of you who are using GP today are very familiar with this. We can see from home down through, for example, to the HR payroll. These are all out-of-the-box Dynamics GP modules, and they all have the same familiar look and feel. If I highlight one of those, of course, we've got the area to create our cards. We've got where we go to get some work done to the transactions. We've got inquiries and reports and routines and utilities. If I go down to anything that's built by BinderStream, and that's from this utility all the way down, you'll notice in here we have the advanced recurring contract billing. It has the same look and feel as any other Dynamics GP module. We do this on purpose. We want all of our products to be just another extension of GP. Makes it easier for you to get up to speed to learn it. You know how to use GP, few little differences with ours, but for the most part, it is a GP module. Let's jump right in and start with looking at a billing schedule. I'm going to show you a couple different examples here. And I'm just going to go back one. So I've got a billing schedule set up. Everything above the blue line, of course, is the header. We're going to create the header information first. And when we do that, we can bring this in. As you can see, it is compatible with our multi-entity manager. So if you're using that, that's fine. It will work there as well. So from that perspective, this would be the company, the department. If you are not using multi-entity manager, that's fine. The system is smart enough to recognize whether those two products are installed together, and it will work accordingly. Obviously, we're going to have different schedule types. This allows me to create reports on schedule types, customer groups, however I want to use those. As you can see, I've got maybe different fee groups. I've got maybe a retail and a wholesale pricing. I want to run reports, write invoices, and so on. That's an optional component. Each module, or I'm sorry, each schedule has a unique bill. This is kind of the key that allows us to differentiate one schedule from another. Coming down, we're going to grab the customer. Now, there are some things that Dynamics GP does really, really well, and I say the same thing whether I'm demoing this product at Business Central or Finance and Operations, is Microsoft has a really good handle, of course, on the general ledger, the receivables, the payables, those master records that go with that, the customers and vendors and so on. So rather than replicate what they've done, try to rebuild the wheel, we're actually just building on top of that. So when I pull up this customer, this is the same customer that you would use in any other application inside of Dynamics GP. The advantage of that, of course, is again, not replicating those master records, but when it comes to reporting, whether I've created the invoice through the advanced recurring contract billing, or whether you've done it through the receivables module or some other third-party product, all these invoices show up together. So when you run an age trial balance or a balance on this customer, a customer ledger, a customer statement, everything is there. You don't have to go to multiple places to pull it all together. Of course, when we grab that customer, it brings in a bunch of additional information about the customer. Over here in the middle, notice we've got our billing frequencies. So I can bill this monthly, quarterly, semi-annually, annually, one time. We recently added, I mean, by recent I'm saying a couple of years ago, weekly, daily, and a miscellaneous option. So you can really filter down to how you want this to bill. Now, I'm putting this at the header level, but I can override it at the line level. You'll see that when we get down there. So even though the header says, yes, it's monthly, I can override it, and each line can be unique. I'm going to put in my billing start date and my billing end date. This occurrences is kind of a convenience that we built in. You know, if your sales guy goes out and he trying to maybe co-term something with a customer, and he sells a 46-month contract. Well, what's 46 months from today? I mean, I guess I know what 30 or 48 would be 2 years. I could back off by 2. And you know what? Why don't I just put in the start date, put in 46 months, let the system calculate the end date? Not a problem there. Okay, so that's basically the header. Yeah, there's a few other fields on there, but that's the bulk of it. Once I've got this built, I then start adding my line items. And if I go down through the items, again, these are out-of-the-box items. So these can be physical items, inventory items. They can be service items. They can be kits. They can be miscellaneous items. Any of the item types are available in the standard GP install. We can handle them all. So when I put the items on, I'm going to grab the start date and the end date. Of course, they're going to come from up here. If I expand the line, I can see my billing frequency. Notice here, this one is a one-time item. So it inherited originally the monthly from the header. I overrode that. And if I go through my items, if I just click on this next, you'll notice I'm scrolling through the items. This one, the software, is a monthly item. I've got my service contract is an annual item. I've got professional services, again, as a one-time item. And then I've got this tiered item and so on. So I can have different frequencies, different parameters for each of these items. Now, some of these items might also be deferred, some not. We're going to come back to that in just a moment. Notice from a pricing standpoint, right here in the middle, I can use standard or extended pricing. So if you want the pricing based on what would Dynamics GP do with this item if I were to just throw it on an invoice, that's really what we're talking about with standard or extended. Of course, in GP, you have your choice. Standard pricing just simply goes to the price list, pulls the price list based on your price level. Extended allows you to create customer price books and price sheets. If you're using either one of those, we will bring it in. If this customer was using extended pricing, or if my environment, I would bring in here also the price sheet, and that would default in here, but I could override it if I wanted to do that. When I choose flat pricing, this allows me to come up to the unit price and key in whatever I want. Now, why would I want to do that? Suppose we're in a situation where your sales team is told, go out and make the best deal you can. You know, you can give discounts, you can cut prices. You know, if you can get a little bit more, that's great. Just make the best deal for us and the customer. So maybe this item sells for $8,000. But, you know, I give my customer a $300 discount, so I've got here $7,700. You know, another salesman might go out and say, you know, well, I'm going to work things a little differently. I'm going to give a discount on the service contract, but I want $8,500 for the hardware. And every sales guy is doing something different. How do you build a price list with that level of flexibility? You really can't. So we choose flat and allow you the ability to either import in using the eConnects if you're using some kind of a front-end system, or to manually key in the price. In either case, it brings that price in. As I go through my items, you'll notice again, I've got my software. This is one I'm billing monthly. I've also got a flat price on it. I'm using the standard pricing. If I keep going through, I've got my service contract. Now, I'm selling this service contract annually. As you know, if I bill something, you pay me, and it's for an annual service, I can't necessarily recognize that revenue today. Under the accounting standards, in particular ASC 606, I may have to defer that revenue. Now, there may be some reallocation that happens as well. We're going to talk about that in just a little bit. But for now, let's just assume that there is no reallocation. I simply need to take that $3,500 and I need to defer it. How do we handle that? What we've done is on the item card, we have added a section right here that simply says, when I sell this item, it is deferrable. If this was a physical item and I also want to defer the cost of goods, of course we want to have that matching of the revenues and expenses, I could tell it that the COGS was deferrable. This is a services item, so I don't have COGS in this case. I'm telling it that it is a standard recognition and that we have two different methods of doing deferrals. Standard simply says I'm going to split this. In this case, I've got a monthly 12-month. I'm going to take my $3,500, divide it by 12, spread it out, recognize so much each month. And I can create as many of these templates as I want. In this case, I've got simply a 12-month. It's recognized monthly over 12 months. In my database, I've got some different examples. I've got a 24-month. I've got a quarterly. There's all sorts of different options. You can be very flexible in how you create these. The event-based allows me to create milestones. We're going to show an example of that here in just a bit. Professional services might be a good example of that. I'm going to sell a bunch of hours, but I don't know how many I'm going to use and when I'm going to use them. I want to recognize them as that happens. So there's milestones or events that I can create to pull in those dollars. So again, I fill in some basic information here. This is allowing me to define my GL accounts. So where are those dollars going to sit on the balance sheet? Here I've got revenues, here I've got expenses. Of course, I can do my COGS and markdowns as well if I have those. But this is the balance sheet account. When those dollars move from the balance sheet to the P&L, in this case, my revenue, I want it to hit my 4100 account. I can also put in my COGS and my markdown recognition. I also have the ability to do the same thing for expenses. Now, because we've added this to the item card, all I have to do is take that item, simply drop it on my billing schedule. Conversely, as Justin mentioned, we have customers that don't do recurring billing, but they need deferral. So I could take that same item, simply drop it on a sales invoice, and what happens is the logic from behind that pulls back in and says, because of the way the item's set up, I know it's deferrable, standard. Here's my recognition account. It's based on 12 months, brings in the dates. When I post this, it will automatically create a deferral schedule. And I'll show you examples of some of those deferral schedules in just a moment. So that's a straight line recognition. Now, if I keep going down, here's my professional services. You're buying 45 hours at $225 an hour. I don't know how I'm going to use those. I might do 40 hours of service this month. I might do nothing. Next month, I might do a few hours or nothing. But I can only recognize the revenue as those milestones are met. So again, I'm going to take that item, and if we notice again, if I drill in, we have that same section set up. But in this case, I have an event-based and a milestone-based template. In this particular template says, I've got 3 milestones. I can add more as I go. So if it takes me maybe 5, 6, 7 months to use those 45 hours, I just keep adding milestones till eventually I'm 100%. And I can do this based on equal amounts, by percentage, variable amounts, which is how this one is built, or based on percentage of completion. So I can set up this schedule. And again, this information feeds back behind the item. And if we look in here, we can see it's taking the milestones. I don't have any dates, though, because I don't know yet when this is going to happen. I'll show you an example of what this looks like in just a moment. The last item I want to look at here is the tiered pricing. So we have different pricing methods as well. So we have, if you look in this price option, we have a standard, a tier, or a flat tiered pricing. We also have the ability for some of these items, and this is a metered or a usage-based item. A metered or usage-based item can be based on a meter reading. Think of the power meter on the side of your house. See, I'm old enough to remember when the guy used to drive in the yard with the old beat-up pickup truck, and he'd jump out and he'd write the number down on the piece of paper, jump in the truck and go next door and try to make all this happen before the dog bit him. A lot of it's done electronically now, right? So we've got meters on the side of our house. They're tracking the power that we're using. The power company takes the number from last month, imports the number from this month, and calculates the difference. We do the same thing here. We can store those meter readings. We can do it based on consumption. Consumption is more like your cell phone. So here's where those meter readings would be stored. The previous reading and the current reading would calculate the difference, or if it's based on consumption, it's just the amount consumed. Think of your cell phone. I have a cell phone that allows me 500 minutes free. What the phone company does is they look at my beginning of the month, set me to 0, and they watch how many minutes did I use, how many phone calls did I make, how many texts did I send, whatever the measurement is. They track that, they import that, and simply bill me for the consumption. Now, there may be some of that I get free. We can handle that as well. If we drill in here, Notice we have the ability to give a free amount, either by period or cumulative over a number of periods. We can also have minimums or maximums. So either by dollar amount or by the quantity consumed, I can say, you know, your bill will never be less than X dollars, or I will never bill you for less than, say, 50 items, but I will also never bill you for more than X dollars or X items. So this is part of our advanced pricing module. It also manages the tiered and the flat tiered. Let me show you how this works. If I drill into this item, it's got the standard price list that we have on every other item in GP with a couple quick exceptions. I can set this up with different levels per item. So for example, I'm saying from 1 to 100 is $1.50 per unit. 101 to 200 is $1.25 per unit. Anything over 201 up to virtually infinity is $1 per unit. So in a standard GP environment, if your customer was to buy 300 units, it would skip these first two levels and say the 300 units fits in here, $1 each is $300. We do something slightly differently. I also want to point out while I'm here, we've added this flat tier price. So here I'm saying rather than charging per unit, from 1 to 100 is a flat price of $1.25. From 101 to 200 is a flat price of $2.10. Anything over that is a flat price of $500. Now, with all of that in mind, let's see how this works. I'm going to go back to my item, and I've got it set for standard. So it's going to look at pricing the way it would do it out of the box. For example, if I buy 100 units, it's $1.50 a unit. 150 is $1.25. 300 units is $1 per unit. Now, we've had customers come to us and say, that's not the way we want pricing to work. We want those tiers to be cumulative. I want the first 100 to be $1.50. I want the next 100 to be $1.25. Then we get the break to $1 per unit. In that case, we simply come in here and turn on our tiered pricing. It will do a quick recalculation. Now we'll notice if I go in that the pricing per unit, notice these numbers are a little different than what we were looking at before because it's doing the average. Here's what's happening. Let's look at this 200. If I drill in here on the unit price, it says from 1 to 100 are $1.50 each. From 101 to 200 are $1.25 each. My 200 are $275. If I go down to my quantity of 300 and do the same thing, we notice it's picking up all three levels, adding all three together. So my 300, rather than being $300 at $1 each, which is what GP would do out of the box, we're charging $375. So you get that cumulative tiering. What about if I were to set this up using the flat tier? Remember, we had 3 tiers, and we only had 3 prices. So when I look at the quantities that I've imported here, and again, we've built all the eConnect nodes that are required. If you've got a front-end system that's tracking this, you can import these usages in. I've come in and manually keyed them. But notice I've only got 3 different prices here. I've got 125, I've got 210, or I've got 500. It's looking at the whole entire tier. So in this case, anything over 201 to infinity was $500. It doesn't care that I use 250. It doesn't care that I use 300. It won't care if I come in and use 1,000. It knows that that entire tier is a flat $500. So a lot of pricing flexibility in there that simply allows the system to be as flexible as you need it to be for your subscription billing business. So that's setting up different items. Now, when I create my invoices, it's a very, very simple process of coming in here to the invoice creator, and I can say, no, I want to bill everything as of, and I can bill in advance or in arrears. We have a lot of customers that will bill that monthly subscription or quarterly subscription, annual subscription in advance because they know what that's going to look like in the future. But if they're tracking usage, I can't bill usage in advance because I don't know what you've used until after you've done it. So I can say I want to bill that in arrears. So I would simply come in and say, no, I'm going to date my invoices for the end of this month. And I'm going to say I want to bill as of, and let's say I want to bill sometime into the future. So I'm going to set up my invoices now for April to give my customers time to get them and get everything turned around. And I can filter this if I want by a particular customer, by a particular schedule identifier, or a schedule type. I'm just going to leave it alone for a minute. I'm going to hit redisplay. Oops, I got to give it a batch. Sorry. GP likes to work with batches. We don't argue with it. We'll give it a batch as well. And when I hit my redisplay, it will go through and it will find everything in my entire database. This does take a moment, that needs to be invoiced. And it's running through. We can see it's bringing in all those lines and it's coming through and it's finding everything. So because I use the as of date, and I could have done this based on a date range as well, first of the month to the end of the month, I like the as of date. And if you combine that with this section that says include prior uninvoiced, it guarantees that nothing gets missed. It goes back into the past and looks to see has something been added since the last time I billed. I'll give you an example of that. Right now we're sitting in February. I'm dating my invoices for February 29th, but I'm invoicing all the way out to the end of April. Well, what happens if a customer adds a new service tomorrow? I've already billed February, March. In fact, I'm billing out to April. Because I'm using the as of and include prior uninvoiced, next time I bill, when I go to run this for May, for example, it will go back and look in the past and find that service that I'm going to add this month and say, you know what, it got missed. I'm going to do that catch up. So there's no revenue leakage, no slippage there. It makes sure that everything gets caught. And we're managing all of this through those billing schedules. So at this point, I would simply come up in here. I'm going to highlight, click mark all. Notice it checks them all off. It tells me I've got 540 invoices. Now, if I scroll across, I can see the details of the customer. I can see the dollar amounts. I can see exactly how much is going to be billed, when it's going to be billed. So I can set this and it'll automatically go in each schedule. So for example, everything on schedule 2, if I scroll down, we can see all of schedule would end up on one invoice. Schedule 7 would be on a different invoice and so on. Now notice schedule 2 belongs to Aaron Fitz. If I scroll down, schedule 14 also belongs to Aaron Fitz. If I keep going down, I've got a couple different ones for Adam Park and so on. So I've got one customer doing a lot of business with me. We've got some options here. Let's say that Aaron Fitz has 10 different contracts. Normally what would happen is each contract, each schedule would go on a unique invoice. He's going to get 10 invoices. Well, what if Aaron calls me up and says, you know what, you're causing a real problem for my billing team or my payments team because they have to enter 10 invoices and I'm just going to cut you one check. So do me a favor, send me one invoice from now on. Not a problem. We simply come up here to consolidate by customer, and then we can say everything that belongs to Aaron Fitz will go on the same invoice. We can even drill down into the user-defined fields on the sales order and say, you know, these must match in order to be consolidated. Maybe Aaron Fitz has 9 of them he wants together and 1 he wants left off. How do I handle that? I'm going to turn on the consolidate by customer, and I just want to clear this out so we can come back in here again. Okay, let's get rid of that. At the individual schedule level, you may have noticed on the header, if I go back into that one that we were looking at, there is an option right here to invoice separately. If I turn this on, but I consolidate by customer, this one won't consolidate. So again, we're trying to give you as the user of the product the most control that you can have to satisfy the needs of your billing department, the needs of your complex business rules, but also keep your customer happy as well. So we've been looking at a lot of functionality here. We've cut the invoices. I'm going to come back to this in just a moment. Let me just get rid of that change. Now, when I post those invoices, and I didn't want to run that right now, but because some of those items were deferred, that will come into the Advanced Revenue Expense Deferrals module and automatically create a recognition schedule. I'm going to show you 2 examples here. If I go right to the end, here's one with 3 milestones. Notice there's no dates in here. So because I didn't know when I was going to hit those milestones. So what I would have to do, and again, I can import this in, or I can come in manually, open it up, and say, you know, as of today, we hit a certain milestone, and I can put in the correct amount. Obviously, I'm going to have to adjust the balance in there. In all the detail, I'm just going to clear that back out. And then when I run my recognition for that particular period, it will automatically pick that up. And it's not going to let me out of here now. You know what, let's just delete that row for now. Okay, so it'll simply go in and allow me to simply build those schedules out, put those dates in as needed. Now, in a straight line scenario, where I've just simply taken it, and in this case, I've got a 12-month monthly recognition, notice I've got my amounts showing here each month. A couple things to point out. Notice this first one goes from October 3rd to the 31st. That was our initial start date. It's giving me a partial amount. That's because I have this default prorate turned on. That gives me a prorated amount at the beginning. Because it's an equal 12 months, I also get a couple of days at the end prorated as well. Notice everything in between is 129.81 regardless of which month it is. That's because I have this equal per period switch turned on. Had this been turned off, it would go in and look at how many days are in each period, and my 31-day months like December and January get a little more revenue than November or April, for example. February has sometimes 28, sometimes 29, so it gets its number of days as well. So we're actually doing a per diem recognition rather than an equal per period. Again, either one is perfectly acceptable as long as it's been confirmed by your auditors and you're consistent with how you apply it. Either one works. What I have found, just from my personal experience, is our smaller customers, the small to mid-sized businesses, like the equal per period, because the couple days here and there don't make a big deal of difference to them. But our customers that are quite large, dealing in the millions or hundreds of millions of dollars worth of billing, a couple days revenue can make a huge difference. They like to turn the equal per period off. Either one works for us. So that's basically, we're going to set up the schedule and we're going to create those billing schedules. We're going to create the invoices, create the deferral schedules. You know, I can use some of this functionality even if I don't want to use the advanced recurring contract billing. For example, if I was to come in and just create an invoice, create a sales transaction entry, and you know, I don't do recurring billing, but I'm going to sell that service contract, so I still have to defer it. I can come in here, set this up, and sell that service contract. And because it is a deferred item, the system knows automatically, and I don't have to do anything else. I can simply post this and create a deferral schedule. How do I know? If I come up here to the additional, I can come down and look at the recognition schedule, and I can see that it has in fact built it out. And again, it's doing that proration from the 25th to the 29th, giving me my equal per period, my proration on the end for that $3,500. All I had to do was take that item, drop it on the invoice, post the invoice. I don't have to open the distributions. I don't have to apply a template. The setup knows how to manage that. Unlike Dynamics GP's Red module, and there are some customers that like that module, here's a piece that is significantly different from what we do to what GP does out of the box. In standard GP, if you're using the Red module, of course, you have to open the distributions, attach the profile, and make sure the distributions are correct. But when you post it, it would create all, in this case, I actually have 13 journal entries because it's 12 months with the proration front and back. And it would post these 13 journal entries today off into the future. Now, I've been an accountant for 25 years. I have yet to meet an accountant that wants me touching their general ledger 12 months out. What if this was a 5-year contract? You're touching my general ledger 60 months out? Not a chance. The only advantage of posting those is so that you can report on it. So you can see, you know, what am I going to recognize next month, next quarter, next year, next 3, 5, 6 years, whatever. Well, we build you a schedule, and we have a bunch of reports and inquiries that still allow you to do that same forecasting, but nothing gets posted until you, as the user, or your account, someone in your accounting team, you know what, I'm just going to post this real quick, comes back into the Advanced Revenue Expense Deferrals module and runs the recognition processing, where you simply come in and tell it what to recognize for the period. Let me just cancel these out. If I come back to the Advanced Revenue Expense Deferrals module, you'll notice if we come back in here to the recognition schedules, we now have a brand new schedule for that $3,500. That's the invoice I just created. Simple, easy, no posting here. Now, if I want to post my journal entries for this month, I come in again under transactions to journal entry processing, and I pick the date. No, I want to post everything as of, let's say it's as of the end of February, because I want to pick up everything for the month. I can come in and I can filter out by schedule, by customer, by document, whatever I want to do. Again, it works with our multi-entity manager, so I can see which companies I'm posting here as well. So I'm just going to mark my company 000. When I hit redisplay, it's now going to run through my entire database. This takes a moment, and it will find everything that needs to be recognized. Actually, that was quite quick. If I come up here now and I click Mark All, it tells me there's actually $573,336.32, and in fact, there's 631 different schedules that need to be recognized. Now, I've got two options. Again, if I'll just expand this out so we can see it, but if I were to scroll across, we can see not only the customer, the invoice, the schedule, the item that's being recognized, but when the recognition date is. Again, because I use the as of, Notice it's going back and picking up anything in the past. This is a sample database. I don't run my recognition every month. Hopefully you wouldn't have anything going back 2 years like I have here, but you would do your recognition in a timely manner. You can see where those dollars are sitting on the balance sheet. You can see where they're going to hit the P&L. Now you've got two choices here. If I were to simply process this, I can have each of these lines be a separate journal entry. So for example, I'm going to debit my deferral account, credit my revenue account for $15, create a journal entry and post it, move to the next one and so on. Well, I've got 631 of these. I don't want 631 individual journal entries. So we've added this ability to create a summarized journal entry. Now what happens is we'll roll up the dollars in each of these accounts, create a single journal entry with all of the detail in there showing you exactly what the 631 items were to make up that $573,000. Because you know when you post a $573,000 journal entry, the auditors are going to want to see the detail. So we give you the detailed report as part of that summarized journal entry. And at this point, it's simply a matter of giving it a batch, clicking process, sit back and let it do its thing. It now gets posted. And you would do that every month and you keep track of it. When we do the actual posting, and I'm going to go back to one very, very early in my database here, you'll notice we mark it as recognized. We stamp in the journal entry number and we give you the date that it was recognized. So not only do you get to see, as we saw in this schedule at the beginning, what's going to be recognized in the future, because nothing's recognized here, but we also give you an audit trail of what's been recognized in the past, because again, you know the auditors are going to ask. Some of the reports that we run with this, of course, also include an audit trail, so you can go in and you can look at, there's the audit inquiry, you can see what's going on there. Now, that's covered a lot of ground. There's one other piece I want to talk about really quickly, and that's the ASC 606. For those who are not using US GAAP, you might recognize it as IFRS or IFRS 15. That simply says that when I have a contract with my customer, I have to determine what are my performance obligations. What is it I'm selling to my customer? What am I obligated to do to them? I have to look at the transaction price of each of those performance obligations. That makes up my contract. I then have to look at the standalone selling price, which basically says, what would I sell that item for absent everything else? If I can sell that all by itself, what would I ask for? But when you put things in a contract, all of a sudden some of those numbers change. I may have a discount. Then I have to reallocate all of that revenue to make sure that I'm putting the right revenue in the right place. So let me go right to the very end of my schedules here. And why am I not seeing schedule 86? It disappeared on me. Interesting. Anyways, what would happen if I come back, I'll find a schedule that actually I can use to show you that. What we're going to do is take the revenue from those items. So here's an example. I've got these items that are set up, but I want to spread that revenue across all those different schedules. I come up here to the revenue allocation, and I can tell it to treat all of these things. I've already invoiced that one. That's not going to work. For some reason, I am missing a schedule. There was another schedule in here. I can create one very, very quickly. Let me just... When I add my items in, the system's going to look at the standalone selling price of those items and calculate what the revenue should be based on the standalone selling prices. So I'm just going to go 1 year here. Let me add a few items. So I've got my hardware, for example, and it's at 8,000. Well, this is the standalone selling price, for example. So, maybe my sales guys got in and said, I'm going to actually sell that for $7,700. So I've actually changed the pricing. Now all of a sudden, I'm not selling it for the standalone selling price under ASC 606, IFRS 15. I have to reallocate the revenue. I've got a service contract. Now it's an annual item. It's deferred. I'm going to leave that one alone. And then I'm going to add a third item. And let's say it is this monthly software. And this one, I'm going to set this one to bill monthly. It's set monthly. That's great. And again, I'm going to change the price on that. And I'm going to say instead of selling it for $77,000 a month, because it's a full year contract, I'm going to sell it for $6,800. My service contract, of course, I need to put that as being an annual item. So I'm only going to sell that once a year. And then I'm going to come in and I'm going to add a discount in here as well. So I can put a discount on the whole thing. and then I have to reallocate the revenue. So let's say I throw a discount on here, and I come in and I'm going to say, you know, that discount is $1,000. Now, under IFRS 15, I have to reallocate the revenue for all of these so that I'm setting it up so that I'm recognizing the correct amount of revenue behind the correct item at the correct time. So again, if I come into my revenue allocation option, you know what, let's take the discount out. We'll just leave the other items in there. I'm going to come up to the revenue allocation. I'm going to tell it that these things are a single contract. I'm going to link them together, and the system is going to look at the contract price, which I can see in this column. So I've got my hardware. I guess it's being billed monthly as well. I've got my service contract annual and my software. It looks at the standalone selling price or the fair value, and then it reallocates the revenue. So we can see that this item, even though it's $92,400 on the contract, it actually gets $93,884 worth of revenue. This one is $3,500 on the contract because of its standalone selling price. It gets $1,466.94 revenue, and so on. And it does that calculation. It's looking at the standalone selling price of the items, dividing it by the sum of those to give it its percentage, multiplying it by the contract value. So under IFRS 15, ASC 606, you have to reallocate the revenue, and this system does it automatically if you have the multi-element revenue allocation module installed. So we've covered a lot of ground. We've looked at billing, we've looked at deferrals, we've looked at revenue allocation. Let's look very quickly at some of the reporting that we have available to us. Under the advanced recurring contract billing, so on the billing side of things, we do have under the inquiries, some quick hit inquiries. We also have some reports. The MRR report is probably the one we get asked for the most. We also have this available in a Power BI version. So this one simply goes out, it's going to look at what do my contracts look like off into the future. Let me see if I can get that Power BI report up while we're here as well. I should have that one right here. The Power BI allows us again to dig in through a Power BI dashboard into our Dynamics GP database and allows us a much more ability to slice and dice the data. So this again is an MRR report, and we've got this built for Business Central. We've got it built for Dynamics GP. We're working on it for Finance and Operations. But notice down here we've got, for example, for each period in the report, my beginning MRR, new sales, renewals, upgrades, downgrades, churn, ending MRR. I can look at this, for example, if I want to say, you know, what's my monthly recurring revenue for my top 3 customers? I highlight the top 3 customers. It rebuilds the data just for them. Again, I can simply turn that on or off. I can do it with my items. If I want to drill in, you know, what's this $3,470 churn? Watch this area here. When I click on the 3470, it rebuilds this area and says, here's the customers and contracts that make up that $3,470. So I can really drill in and slice and dice the data. The standard out-of-the-box report, not quite as fancy, but again, we've got our beginning, new sales, renewals, upgrades, downgrades, churn, ending MRR, and each period. And if I highlight one, assuming this is going to work for me the way it's supposed to, it should split the data in half, and it's going to show me on one side, schedule by schedule, where does each of those items sit as far as the MRR categories. On this side, it does it by MRR category, shows me which schedules and items and dollars are in there. So that's the MRR report, and again, that's just one of those. If we look here, we've got a total contract report, total contract revenue, new contract sales, termination reports. These are all SSRS. That's on the billing side. If we flip over to the advanced revenue expense deferrals, a couple of reports in here. Of course, we've got some inquiries. You know, the boss might come along and say, you know, we've got millions of dollars sitting on the balance sheet. What are we going to defer next month? Well, it's pretty straightforward. I can come in and say, you know, as of, let's say, the end of March, because I want to know by the end of next month, or there's March 31st, what in my system is unrecognized. And again, I might have multiple multi-entity manager companies. I hit Redisplay. It's going to now go through and find everything in my entire database, and I can do this for standard, straight line, or event-based, but it's running through and finding everything in my system that is unrecognized as of that date. We'll give it just a moment here to complete. When it's finished, it will show us the total dollar amount, and again, we'll see line by line, schedule by schedule, item by item, exactly what in the system is unrecognized. There we go. We're showing we have 655 lines, $591,029 that needs to be recognized between now and the end of March. So we can post this anytime out into the future. We can process it, sorry. These are not posted to the general ledger. Nothing gets posted until you as the user want to post it, but we give you the ability to report on it. The deferral revenue report, this is probably my favorite report as an accountant. I started where every other accountant did 25 years ago, you know, doing the training, you're doing your journal entries, your head down, doing your work. And of course, you know, the auditors always walk in 6-7 months later, tap you on the shoulder and say, you know, back on September 30th, suppose that was my year end, you had X dollars on the balance sheet. Can you show me that reconciliation? Well, if I didn't do it, I might be spending the next 3 days trying to figure out what did the balance sheet look like way back then. Or I could simply come in here and say, you know, okay, September 30th, that's not hard to find. It's right there. And I've got multiple GL accounts. So I'm going to group mine by deferral accounts here. Again, I've got all my companies selected. I'm going to hit redisplay. Now I'm going to let the system do the work. It's looking at anything, even if it's in history, canceled, reclassified, put on hold right now. It's going to go back and rebuild my balance sheet saying as of that date, I had $690,000 original amount. I had recognized $51,477. There's the $638,911.13 in the balance sheet. I can even take this right down to do it in detail or in summary. The detail report shows every single schedule, line by line, account by account. So there's my 2100.10 account. Every schedule, the original amount, what was recognized, the balance. If I scroll down, eventually at the end of this particular GL account, I get my subtotal. Goes to the next account, there's my $638,000. So the ability to get the information back out, as long as we have built the deferral schedule, we can run this report again. Even if something's already been canceled, it's already timed out. If it's in our system, in your GP, what did it look like as of that date? We can build that out. We also have as part of the SOAP, sorry, I shouldn't have closed that. The same report, there's 2 other options in here. There is a waterfall report. This simply shows period by period how are those dollars going to move from the balance sheet to the P&L. And then the declining balance report is what's left on the balance sheet as we run through those. So that's advanced recurring contract billing, advanced recurring expense deferrals, altogether subscription billing suite in Dynamics GP.
So any immediate questions?
One thing I will throw out there while we're waiting for questions to come in is one of the things that Binary Stream does offer to you folks at Endeavour, to your customers, is the ability to look at our product in a little more detail. If someone out there is looking at this saying, you know, you just threw way too much stuff at me in 40 minutes, that's a lot to cover. We're more than happy to get together with the sales folks at your end and do a one-on-one demo with any one of your customers looking at some of their unique scenarios. We know not everybody's the same, and we'll tailor a demo to whoever needs to see it.
Okay, great. Thanks for that, Neil. Have a wonderful day. Thanks for joining, and we'll look forward to seeing you on our next webinar. Bye for now.
Thanks everyone.